Welcome, John. We've seen great performance from the Toronto Venture Exchange so far in 2016. Do you think this is sustainable?
Well, it's been a remarkable year for the Venture Exchange and many junior Canadian companies in general. We do think it's sustainable. The index right now is up over 300% or 60% since its bottom last year. And whether it's lithium or gold or even some of the energy stocks, we're seeing a lot of interest from junior stock investors these days. So I wouldn't be surprised to see us hit 1,000. We're at 785 right now, or even 1,200 in the next year.
Can you give us your thoughts on the commodities that are driving this rally in the Venture Exchange?
The general commodity complex is higher, but it's no secret that gold and oil are actually driving a lot of the rally that we're seeing in the Venture Exchange. Gold's comfortably gone through 1,300, and I think that's caught up a lot of people by surprise, and they're very interested in gold stocks again. And also, I think there's a general feeling that there's stability in oil prices, although they will bounce around a little more going forward. We have seen those prices off their low, and we believe that they'll be sustainable at these higher levels.
What are some of the risks investors should be looking out for?
Well, there's continued geopolitical risk that seems like it's with us every day now, and that seems to have a positive influence on gold. But anything that's going to affect consumer demand seems to be having a negative impact on what happens with energy prices. But by and large, we don't think volatility is going away. We just think there's a new normal in the volatility levels that seems to be attached to the day-to-day news we see in geopolitics.
As a portfolio manager and chief investment officer at Gravitas Securities, you're familiar with many companies. Are there any standouts that our investor audience should know about?
GSI deals with a lot of junior companies. We have both a corporate finance and an investment bank department that interacts with a number of the companies we're involved with. We're also a portfolio manager for a number of funds that also hold junior investments. So I'd like to preface the discussion on some of the standouts with we own most, if not all, of the companies that I'll be talking about today. One of our companies is Treasury Metals. And Treasury Metals operates in the vicinity of Dryden, Ontario. This is an area that's seen a significant amount of acquisition activity and has been getting more and more interest, particularly in that area or that gold belt. Treasury itself has a fantastic asset, and this company has been executing very, very well over the last few years in getting their permitting in order, and they've hit every milestone that we've expected them to hit in the couple of years that we've been following them. Treasury is operating in a district that we've seen a lot of different acquisitions just in the last few months. One of the most recent actually involves Treasury, and they have rolled in a company called Goldeye, which also owns a very significant and high-grade asset, which is very complementary to Treasury's asset just outside of Dryden. One of our favorite energy ideas is a company called Groundstar. Groundstar operates in Alberta and Saskatchewan, and they're looking for new assets in the Devonian Reef, where light sweet crude is the target for the drilling that they are doing. The company is a producing oil driller, and their stock currently trades at around 2 cents. It's not too often that you find a 2-cent stock with a very, very small number of shares outstanding that actually have production. Groundstar is taking advantage of some of the lower prices that drillers are offering these days for oil companies to do further exploration. As a matter of fact, Groundstar is taking advantage of 40 to 50% lower costs for their drilling. And also, they've recently partnered with a company that does 3D seismic. And 3D seismic is very, very expensive, and it's absolutely critical to the type of ground formation that Groundstar is investigating new resources in. The company is also putting into production some oil wells that they currently own that have been mothballed with the lower prices in energy. But with the higher prices that we're seeing today, the company believes it can bring on this new and more profitable production. The new wells that they're looking at today, because of the type of oil that they are looking for, have 12 to 16-month paybacks. And that's extraordinary for a capital outlay to have your money back in the oil patch in that short a period. Nature Bank's core business historically has been carbon credits and services into the carbon credit industry. Carbon credits and carbon offsets continue to be an increasing topic in government regulation and also investor interest. And new regulations that surround the carbon credit industry will be very positive for the Nature Bank. Nature Bank's core business historically has been creating carbon credits and offering services into the carbon credit industry. Carbon credits and carbon offsets continue to be a growing industry pushed both by government regulation and also investor interest. New regulations continue to positively impact Nature Bank's business. Nature Bank has developed a new division that will be focusing on sustainable land use and land projects. That means they're focusing on commodities that can be grown on land that's not currently being used for any commercial purposes. Through their new German partners with a very, very proven track record in this type of impact investing, the company hopes to see significant growth.
Thanks for taking the time for today's interview, John.
It's been my pleasure to be giving you some of the ideas that we're following here at Gravitas Securities Inc. And bear in mind that we do own these in our funds, and we are currently offering these corporate finance services to these companies.